What's going on, guys? Welcome back to another video. CPI inflation came out today. It was released and it showed that the February 2023 increase from 4.4% and up 6% from a year ago. So it's not looking good, but although it was at par to what the market was expecting, they were expecting it to be around this range, and well, it was. And that's why you saw the stock market have a little bit of a breather today, since last week with all the things that's been going on. Silicon Valley Bank failing last Friday, and then Monday with the Fed's coming out and saying that basically there was going to be bailouts and an infinity amount of money. You can see over the years that the amount of bailout money has just been increasing, the FDIC amount, to where we are now at 250,000, which is where it was supposed to be. However, most of the Silicon Valley Bank deposits were above $250,000 because most of them were this bank used to basically fund startup companies and things like that. So it was a lot of investors that were in this bank and that had a lot of money in this bank, and now the feds are coming out and saying that they are going to basically keep printing more money for them and bail them out. As you can see, Signature Bank is one of the banks that have failed. In the last week, that's one of the banks that has failed. And you can see that yesterday the Signature Bank board member says that regulators shut down the bank to send a strong anti-crypto message. Now, a lot of these banks that were being shut down or going out of business, they were funding startup companies, and a lot of these startup tech companies were into crypto, Web3, things like that. So I don't necessarily think that they want to see crypto and Bitcoin grow as a whole as fast. I believe that the feds are a little bit afraid of that. However, the feds do actually have some Bitcoin from the Silk Road, when they took a bunch of the funds from the people that were doing crimes and things like that, according to them. So they still have a lot of Bitcoin. They have over like 100,000 Bitcoin. Just holding on that. That's a little bit fishy because I don't know exactly what they're going to do with that. If they can just continuously print money to bail out these banks so that the people can get their money back, but they're shutting down these banks that are essentially funding crypto startup companies. I mean, all that's going to do is make Bitcoin do what it did, and you can see that Bitcoin today went all the way up to $26,500. Now, is it going to stay like this? I'm not really sure. It looks like we're going back down to retest this 24 period, but you can see over the past 7 days that we've been in for quite a run. I mean, I believe this was Friday or so when the Silicon Valley thing had happened. Everything pretty much had kind of gone down, and you saw Bitcoin go all the way down to 19,000, but now suddenly we're up to 26,000. So I gotta point something out, because when we were really pumping, like around this time, my portfolio was up to a certain amount of money. Now that we're past this, or Bitcoin is actually way higher, as you can see, my portfolio is still not hitting beyond where it was back in February. So that's telling me that a lot of the altcoins are not where they should be. Let's go take a look at that so that way I can show you that it's kind of getting close, but we're hitting some sort of resistance to where these coins are not necessarily passing this point. So you can see on the 3 months, and I go back and I look at February, Bitcoin is past the February point. However, most altcoins are not past that. It makes you kind of wonder exactly what's going on. I feel as though Bitcoin is definitely going to come back down. However, we cannot always predict that. We can't predict the future, but according to these altcoins, I mean, we're not even past the highest point, but yet Bitcoin is past the highest point. So I did notice that if you were following the chat, you would seen that I showed that the altcoins were not passing the resistance point of earlier this month even. And so now we're kind of touching that point on a lot of altcoins, and I can go back and I can show you on many various altcoins. We're going back and we're kind of testing that area. However, we're going to need to hold beyond that point. You can see even Chainlink is not even past that point. So we're going to need to hold around this point if we're even thinking about going up. So if we don't do that, then we're going back down, because also Bitcoin has shot up and it's not very sustainable. Now also, with the whole Silicon Valley banks and the other banks that have been failing and inflation, our markets are expecting the Feds to not raise rates next week. And in my opinion, I don't believe that this has anything to do with that, because they're just banks that fund a lot of tech businesses, and there's been a lot of bank runs, and there's, a lot of bigger banks have been processing way more, withdrawals than normal. However, I don't think that that's enough to affect the Fed's decisions on whether or not we should be not raising rates anymore. I mean, inflation might be slowing a little bit. However, it's not completely where they need it to be at. If that was the case, then maybe I could see that. But the Fed's not raising rates is just not going to happen. They're definitely going to raise rates. And so we're going to probably most likely see this come down, as we're also seeing the stock market come down as well at this current time. I don't have it pulled up, but there's Carvana stock is definitely coming down right now as well. So I don't know. We'll see exactly what happens. Of course, there's no one that's giving financial advice over here or anything like that. But just from the looks of it, we're definitely going to be getting those rates raised. And so the market is going to be affected by that, because people always jump the gun way too early. And that's exactly what had happened in February. And then we had this big old drop right here. Yeah, it was only for a few days, and it kind of caught me off guard as well, because I thought maybe there would be more time. But you can just see that, these lows right here, it was forming a nice uptrend, but now it's like there's a lot going on right here, and we just don't really know until next week. And I'm telling you, mark my words, if I'm wrong, I'm wrong, but I do believe that there will be another rate hike next week. I don't feel like this is enough to stop the Feds on any decision that they're making. Housing market is still not down where it needs to be at. Like they said, the housing market's rates go up slowly and they come down very slowly. Till any of those things start coming down at an increasingly higher rate, it's just not going to happen. We're going to keep increasing those rates, and the economy is just going to keep on getting worse than wherever it is, or hopefully better, but you know what I mean. It's going to get worse because they're going to keep inflation is just going to keep on, or the rates are just going to keep going up. And so as you can see right now, Bitcoin is coming down heavy, super heavy, just like, I was thinking this kind of happened out of nowhere. I didn't even catch it happening so quickly. However, you can already see we're coming back down. People are just going to have to realize what the truth is, and that things are just not going to move as quickly as everyone's expecting them to. I know this was March 7th. The Fed is definitely going to be determined to keep on raising rates. I know a couple days later the whole bank thing happened, but like I said, none of that stuff is going to affect anything that is actually going to happen. You can see already right here that the FOMC meeting is already trending on Twitter, and people are already talking about what's going to happen next week. It's just not going to go the way that people are trying to expect that it's going to go. The rates are going to go up. They're going to keep doing it until something breaks. There's too many jobs that are being imported into our economy. They don't need more jobs in our economy, because all that's doing is causing wage inflation. Wages are going up because they need more people to fill in those jobs, so they're giving people more money to be in those jobs. And by doing that, the prices of everything else is going up, because if you're giving people more money, they have more money to spend, and it's just supply and demand. So at the end of the day, something's going to break eventually. They're just going to keep doing it until something breaks, and then everything is just going to level out the way that they want to. Or the other option is we're just going to have to live with inflation. You can see that the purchasing power of the dollar has decreased over time. You used to be able to buy candy with 25 cents. I know you hear your grandparents talking about that. Now you can no longer do that. It takes $300,000 roughly to buy an average home in America. It's just either we're going to have to live with it, or they're going to have to keep raising rates until something breaks. It's just how it's going to be. Hope you guys enjoyed this video. No financial advice. Appreciate you all. I'll catch you in the next video.